Hi everyone and welcome to a brand new episode of Buy Now Sell Now on campus. Today I'm at the very recently launched ISME, that's the Indian School of Management and Entrepreneurship. With me is a classroom full of very bright students. They're of the undergraduate course of the BME course, and we will be joined by our expert who will be guiding us over the next 30 minutes to walk us through the outlook of the markets. Joining in is someone who needs no introduction, a veteran in the markets with over 20 years of experience of fund management and equity investing. We have with us Mahesh Patil, CIO, Birla Sun Life Mutual Fund. Mahesh, thank you so much for joining in today. I want to start off by talking about the general market environment. It's been a lot of global cues that have been guiding us so far, but what's the outlook right now as to where we're headed?
So as you know, I mean, the market after the Modi government came to power 2.5 years back has seen a decent rally. I mean, the markets probably had run ahead of expectations. On the economy front, we haven't still yet seen the kind of an uptake, but clearly in the last kind of 6-7 months, we have seen kind of on the policy front significant actions by the government. We've seen the power sector reforms, which was initiated. The banking sector again underwent through a kind of a cleansing exercise in terms of reporting of the NPAs, and then a lot of kind of reform on the banking sector to really reform the PSU banks. We saw that. More recently, we have seen the GST, the Goods and Services Tax bill, which was passed after a lot of effort. It took some time because the government didn't have the majority in the Rajya Sabha, but I think the government has finally learned the trick of trying to really work along with the opposition and get important bill like GST passed through. We should see the benefit of that coming through. So I think at this stage, we think Indian economy is in a situation which is kind of a very, very envious situation compared to where the globe is, right? We are at an inflection point in our growth where our growth outlook is likely to improve at a time when global growth is weak and kind of, I mean, where we've seen downgrades to the global growth. Also, our macro situation has never been as good as what it is currently. We have seen inflation, which has been a perennial problem for us, has been now contained at a pretty comfortable level. We've seen CPI inflation being in double digits 2 years back. Now, because of the policies by the government, also some benefit coming in from the lower commodity prices, and RBI and government specifically targeting inflation through its monetary policy. Inflation is now somewhere around 5% or so, which is a very, very reasonable level. And we think that structurally in India, inflation would remain at moderate levels, which is good for economy to sustain growth without having kind of a major hiccups down the line. Also, on the foreign side, policy side, we have seen that I mean, not just around 3 years back, we had a major crisis on the current account deficit. We had a sharp rupee devaluation. But since then, we have seen that the outgoing governor, Raghuram Rajan, when he stepped in 3 years back, he really worked around that, and whatever measures which were taken, and also because oil prices came down, our current account deficit is now under comfortable situation. So our fiscal, if you look at reserves, forex reserves are pretty comfortable. The rupee has been the most stable currency in the last 1.5 years, when globally we have seen a lot of volatility. So I think there are, I mean, the foundation for our economy and this thing is in place now, and I think with some of the investments which the government has done in the infrastructure sector, the good monsoons what we saw expecting this year, we should see a slow pickup in the economy, which should help the economy to gather some momentum in the next coming years.
So let's get right to it. Let's not hesitate, ask some questions. So we'll start off with the first venture here. Go ahead.
My name's Yash Chaudhary. So my question to you is, mutual fund investments are subject to market risks. So as an investor, what risks do you foresee?
So I think what risk people see, what people mean by risk is volatility. And normally when investing, I think typically investors are risk averse. When we say that, is you're fearful about the downside, losing your money. So compared to a fixed income where your capital is protected and you get a fixed return on that, investing into equities or into the market, you can see short periods of time where your actual investments can go into negative. So your principal can get eroded. So that's what I think the risk. And risk is, I mean, fundamentals are one, but market is determined by various factors. I mean, fundamentals is one, as I mentioned, liquidity and other factors. Sentiments also impact the market in the short term, which could impact prices, and in terms of the downward risk what you can see in the market. So essentially, it means the volatility and erosion of your capital in a short term if the market conditions are adverse. That's what normally when we make that kind of a qualification.
I want to talk a little bit about, Mahesh, the outlook on the telecom space, only because it's been garnering so much attention with Reliance Jio's entry into the space. Competition's heating up, and a lot of analysts are talking about the balance sheet stretching, how this sector is now going to look, everyone's going to be a little bit cautious, perhaps a re-rating. What's your sense for telecom? Who are you dialing into?
So telecom has been, I mean, if you look at the history back in telecom in the last 10, 15, has seen a significant growth in terms of penetration, and competition has only helped that to really drive the penetration. We have seen the prices of tariffs in India. Tariffs are one of the lowest in the world, and we have seen the handset prices, okay, which was a great entry barrier. Prices have also come down. So we have seen now fairly good penetration on the voice side. Data is something which we have seen in the last couple of years, seeing a significant growth. Telecom will be the next leg of growth with the increased penetration of smartphones and a lot of content which is available. And so at this time we have seen that when the sector was at a kind of inflection point where normally the ARPUs tend to bottom out and then again start to increase as data increases, but because of more competition coming in, a new player coming into the market with deep pockets, we have seen that there is some disruption which is happening in the telecom space, which would lead to some kind of, we have seen recently Reliance Jio came with their plans, and we have seen price follow-up action in terms of data price cuts by the incumbents. So I think it might see a phase where you would see some kind of a moderation in terms of the growth, especially on the data side. And also the spectrum auctions, what we saw last time, and the current auction is on, depending on how the bidding happens. See, whenever in telecom, after a certain period of time, you need to again reinvest for new auction. So in that sense, the capital intensity has gone up. So from a free cash flow generating kind of sector for large players a year back, it's again probably going to be a negative free cash flow. So I think you'll see some consolidation in this sector. Market will wait to see, okay, who is likely to be the winner out of that. But I think I clearly believe that the leading player currently in the GSM space, I think they will continue to, after the kind of a shake-up, will continue to emerge the winners. The weaker players, okay, where it is more fragmented, would see a further consolidation and probably and will lose in this battle.
Okay, let's get the next question going from up front.
Hi, sir. My name is Utsav Shroff. My question to you is, in the near future, that would be the next decade, which sector or which two sectors rather would you find to be the most bullish in terms of growth, in terms of investing, which would drive the growth forward? Which would be the two sectors you would bet your money on?
So I think if you look at our economy and where we are placed at this point in time, I mean, India still is a large, I mean, our demographics still continue to favor us. We know that India is still a young country. There are a lot of young consumers and who are coming into the consuming class. And we'll continue to have that demographic dividend at least for the next decade or so. And given that, and the fact that our per capita GDP also is at a point where we've seen a demand for a lot of consumer discretionary items start to pick up. I mean, our per capita currently is around $1,700. So I think consumption, consumer discretionary would continue to be a sector or where you would see a steady growth, considering the under-penetration which is there in a lot of categories. And companies which are having strong brands, key competitive advantages, a good distribution, will continue to do well in this kind of an environment. So
you like NBFCs as well?
Yeah, so I was coming to that.
Yeah.
So that is, so one is the consumption really, more I think discretionary consumption. I think the consumer staples is where the saturation, the penetration levels are pretty adequate. But a lot of the high ticket consumer durables, for example, I mean, if you look at the growth for some of these recent numbers, have been pretty strong. Look at the volume growth for air conditioners or for the car sales numbers have been pretty strong. So I think that a trend will continue. Again, I think there is a big India, if you look at, is still pretty under leveraged at the consumer level. So I mean, if you look at the personal leverage at the individual level, in India is still very low. I mean, Indians typically don't like to have a lot of credit going on compared to some of the developed markets and US. If you look at a lot of things, consumption happens on credit, but that's changing now in India, and because of better credit quality checks, okay, because of CIBIL and other things, the companies are also willing to give credit, okay, to individuals, more unsecured loans, and the fact that the retail growth for a lot of the consumer items is going to be strong. The financial services sector is also likely to see a good growth going forward, more so on the retail credit side, which includes a lot of auto financing companies, the mortgage finance, because again, housing sector itself, the ownership, if you look at it, there is still huge unsaturated demand over there. I mean, currently the housing market probably is not doing well, but that's because of the prices, but we see a lot of growth over there. So I think the retail credit growth is going to be strong, and companies, NBFCs and banks which are focused on that are likely to see a multi-year kind of a growth.
Okay, there you have it. Tell you what, we'll slip into a quick break right here on the show, but on the other side, we'll have Mahesh Patil tell our students how to get to the head of the class when it comes to investing in the stock markets right here at ISMEs. Welcome back. I'm in the midst of a conversation with our guest Mahesh Patil at the Indian School of Management and Entrepreneurship, and we're talking about what is the outlook for the markets and which sectors are attractive. Let's take it straight to the next question from this young gentleman.
Hello sir, my name is Karan Gupta and I'm from the BME program. So being an expert in investing, I would like to know how would you evaluate a company before you invest in it? Like what would you do to for your evaluation and for, what attracts you to be invest in the company?
Yeah, and if I could add to that, so Mahesh, just like maybe a list of do's and don'ts before investing.
I mean, it could either start in terms of running some screeners, okay, on the broader market on various parameters, either on growth or either on return on profitability ratios, to really come down to a kind of a small subset of universe, because the market is pretty large, right? There will be around 500 plus companies which could be worth investable. Within that, you want to filter down to a few number of companies, and then you look at, or it could be more of a top-down process. I mean, you look at a sector, okay, where you think that there is a big opportunity which is there, or a big growth in a particular area driven by various factors. It could be under penetration, it could be led by either global growth, and that once you get the big opportunity, then you drill down within that, okay, which are the companies which have got the right to win in that sector, right? That right to win could come in either, okay, from some kind of a key competitive advantage. It can either be a cost advantage, which is important in a few sectors where cost is can give you a competitive advantage. It could come in because of strong technology, okay, which would give you that edge, or it could come in because of strong distribution, okay, which is mainly in the consumer side. So you need to identify which are the companies which have the right to win based on some of these competitive advantages, and then once you have done that, then it comes down to really understanding the profitability or the various ratios to look at whether the company is able to generate returns which are significantly superior than its cost of equity, but more importantly whether it generates good cash flows in that business. And then finally is to really meet the company, meet the management who is driving that, because finally that will really will create value in the longer term. If you have the right management team at the top, you will be rest assured that they will steer that company through various ups and downs and do the right things for the company. And for that you look at various things like how has been the capital allocation decisions by the management in the past. What is the vision of the management in terms of trying to really understand the competitive scenario, the macro environment. So all these factors is what you will look at when you're trying to evaluate the management. And then finally, you would look down at the valuations, because at the end you have to buy the stock also at the right price. I mean, it might be a great company and this thing, but if you don't buy at the right price, you might probably not make enough returns for us to really justify justify to outperform the broader market. So I think valuations would come last, I would say, but all these other factors is something which you would really pass through your test. And even if you buy something which is slightly expensive today, but if you get the long-term picture right and long-term growth, because long-term growth, the power of compounding is so great that over a period of time, the current high valuations would really start to look attractive if your projections on growth are pretty good. So that's the way I think one would go about really evaluating or identifying a company. In terms of do's and don'ts, I would say that one should not get carried away by the stock price momentum, because see, stock price in the shorter term is driven by a lot of factors. It could be liquidity, and it could be some kind of a fancy or some kind of fad, okay, which could take the stock prices high. So one should not really get carried away by the stock price to really look at a company just because the stock price is doing well. And one should not, I mean, don't base your judgment based on one data point. Okay, normally you should look at multiple data points to really evaluate. When I say that, like for example, if you're talking to the management, okay, they might give you a particular view about the company and what they believe, but then you have to really try to do further ground research and look at what the other competition is telling you about it, what the distributors are talking about, what the channels, okay, is talking about, whether they are also in sync, okay, or collaborates with what the management is saying, and try to have multiple data points to really finally arrive at your whatever the final decision.
Hello, sir. My name is Aditya Khandelwal. So my question to you is, what according to you is a good investment horizon?
So the investment horizons, especially when you are investing into equities, as an investor, from investor standpoint, okay, I'm looking at it now, you should have, say, at least a 3-year horizon, I would say. But ideally, I think you should have a 5-year kind of a plus kind of a time frame, because equities, as you know, someone talked about the risk and the volatility and the chances of making negative returns. So as you increase your investment horizon, your chances of losing money in the markets diminish dramatically. So if you look at it from 3 years perspective or a 5-year perspective, it probably 5 years, if you look at it, the chances that the market has given negative returns would be less, around 10%. If you go to 10 years, then the probability is almost 0. So clearly, because of the volatility and there are a lot of extraneous factors which could affect stock prices or markets, it's important to have a decently long time frame, so that you don't really take decisions or you enter or exit a stock which is in advance, when the timing is not really right. So and that's the time frame I think normally one should look at. Normally when we look at companies and evaluate companies, okay, from a portfolio perspective, okay, we would look at from a, say, 1 to 3, at least a 1 year perspective is what we take, but normally ideally we look at a 2 to 3 year perspective, try to really forecast earnings over the next 2 to 3 years, and then try to see whether there is decent value on the table for us to really make money in that stock.
And in fact, recently we had an investor who came on our show. He put money into MRF way back in 1968 at just 17 rupees. Today that stock, I don't know if you guys monitor, is 51,000 rupees. So he's sitting on a pot of gold, so to speak. So interesting that he asked that question. Let's get in a question from our social media expert here in the front.
Hello, sir. My name is Nishan Jasani. My question is, what advice would you give to young entrepreneurs like us studying at an entrepreneurship program just when we're beginning to invest? Or what advice did you get when you were a young investor that we should, follow as if we're just starting to invest in the market?
Yeah. So I think there are two things. One is direct investment into equities, and one is through, trying to slightly develop a habit of investing and investing it through professional fund managers or professional thing. So it depends. I mean, I think at the initial stage, it does make sense to invest directly also, partly because it exposes you to the market. You learn a lot of things, okay, when you're investing into a company. Try to invest into companies and sectors where you can understand. You understand the business, okay, what the company does. Try to do your own research. You can always do a token investment, and then look at what assumptions, okay, you should always note down what assumptions, on what basis you are making that investment, and see that over a period of time, okay, how it has played out, whether those things have, and then take it as even if it doesn't work out, okay, it's a learning experience for you. But otherwise, bulk of your money should be, unless you are a professional, you have the real competency, I would say that you should invest it through, that the professionals do that either through the mutual fund route. I think normally people tend to start investing at later, because your savings are not more at the initial, at the early stage of your career. But even if you make a small amount and start investing, the beauty about investment is that because of the power of compounding over a longer term, as one example you talked about MRF, similarly, the earlier you start investing, the better it is for you to create wealth over the over, say, when you really require the money later on in your life. So I think bulk of the money should go towards, say, the mutual fund through the SIP route. But at the same time, I think one should also dabble in a few stocks based on your understanding about a particular sector or a company, and try to and again keep on monitoring that. I mean, important thing is to, people normally make an investment on initial nudge but forget that. But it's important to clearly monitor how it is performing and then take corrective action if it is not working as per expectations.
Okay, and Mahesh, I think we'll wrap it up by, is there anyone that you look up to in the stock markets, or any quote that you remember that you would like to share with our students?
So I would say that, I mean, in the marketplace there are various investors and investment gurus, okay, whom one has read and learned from it at various points in time. I wouldn't say a particular person, but I think at the end of it, one has to really come with one own style of trying to invest in the market. You should identify yours do's and don'ts, and then practice that diligently, I would say. So I think one quote which Warren Buffett, which comes to my mind, is that the market, okay, in the shorter term is a kind of a slotting machine, but in the longer term it's a weighing machine. So short term, yeah, and the markets are driven by the market sentiments, but in the long run, it's the fundamentals, okay, which really matters, and which really determine the stock valuations or the stock prices.
Thank you so much, Mahesh, for taking time out and joining in and enlightening all of our young students here at ISME with your market perspective. And on that positive note, we wrap it up right here on Buy Now, Sell Now. Thanks so much for watching. This was a special edition on campus at ISME.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.